So this is what I call the money IQ flowchart. Okay. I'm going to explain it, but we're going to break it down like piece by piece. Okay. So just looking at it, what you see is a bunch of pigs with words inside of them. Those
Yep.
pigs are quote unquote piggy banks represented on this diagram. And what those represent in real life, what they're the placeholder for is individual bank accounts. Okay. And I want to be very clear about what a bank account is and what I'm referring to. It is a business bank account. It is a bank account that is tied to the EIN number of your business, regardless if it's an LLC, an S Corp, a corporation, PLLC, regardless of what type of entity that you have, that's what we're talking about. Okay. I'm not talking about personal bank accounts. Okay. There's no reason why my business should ever use money, should never come into my personal Matt Beans bank account that I pay for my personal groceries for out of into the business. And expenses for the business should never come out of my personal bank account. Okay. That's number one. And I think that most contractors at the 1 to 2 man show completely screw that up. And that is number one. Like, go open a business bank account.
So on your diagram, you've got like bank one, bank two. So on this example, is there's two bank accounts, but you're just kind of dividing up what's in there?
Nope. So, okay. So
No?
every single piggy bank is an individual bank account.
Okay.
Okay. So in this scenario, in this, can you see my mouse?
Yeah.
Okay, cool. So we've got the income account is a bank account, OPEX, which is short for operating expenses, 2, owner's comp, 3, tax, 4, profit, 5, and then we've got another tax and profit. We've got 7, and then we've got this floater account down here. So we have 8 bank accounts in this situation.
Are
Okay.
these checking accounts?
These are all checking accounts.
Okay.
Yep. There are 2 of them that can be savings accounts, and these are special accounts. We'll go over these last. These are these second tax and profit accounts. Those can be savings accounts. That's totally fine. Cool. So what's going on just fundamentally here, just at a super high level, and then we'll go deeper and deeper, is these are customers with money that pay you for a product, a service, whatever the case is. In this situation, it's usually your construction service, and it goes into a single bank account where all money goes into, which is your income account. Okay. And then we're going to take the money from that income account, and based on certain percentages, we're going to move that money into the 4 areas of business that are all super important to you as a business owner. As the CEO of your business, these are your 4 responsibilities. That's 1, paying your bills and payroll. 2, paying yourself as the owner. 3, paying your taxes, paying Uncle Sam, paying the state, the federal government. And then 4, paying the shareholders of your company profit. Those are your 4 responsibilities as a business owner. Number 5 is you either have a rainy day fund, an oh crap fund, which we can get into that, or you have an expansion fund or a growth fund or an acquisition fund. Like, for example, if you want to buy a piece of heavy equipment, maybe you take a little bit of that income every single month or week, every time you get paid, and you put some money in here. And after 6 months, a year, whatever the projection is, hey, I've got $35,000 and I can go buy me a skid steer, or I can go buy me a Mini X, or I can do a down payment on go into an office building and have a lease and have a yard, and maybe I can buy some dumpsters to do trash apps. So that's one way, is a growth or an acquisition account. But we can get into more strategies on that. It's kind of advanced. I actually 50-50 if I'd rather have it on here or not, but I like to have it on here because it always comes up as a question, like, well, what if this? It's like, well, that's what that bank account's for. So that's fundamentally what's happening. People pay you, your customers pay you, goes into the income account, gets distributed into the 4 areas that you're responsible for as the CEO of your company, and then those ultimately end up where they need to go.
So when do you do that? When do you divvy up this cash?
Before I answer that, I want to tell you why we use this strategy. Because like you've already mentioned, how many of your audience, customers, contractors have QuickBooks set up? How many of them know how to read a P&L? How many of them know how to read a balance sheet? Probably statistically 2% of them, like statistically. So how are they checking if they have money?
I don't know. Looking in their bank account, I guess.
They're pulling up their phone and they're looking at their bank account, right?
Mm-hmm.
But when you have a single bank account and you're responsible for all four categories of these area, or all four of these areas, and you've got 30 grand in the bank account, well, how much of that is allocated to OpEx? How much of that do you owe taxes at the end of the year? How much of that can you go sign a lease for and do a build out either in a yard or in an office space? How much of that can you put towards inventory to buy in bulk and get your 40, 50% discount and actually hold inventory, right? Without putting yourself in a pickle in the next 60 to 90 days. We don't know. Like, that's the honest truth. It's like, we don't know because we're looking at a single bank account with one number. So we use multiple bank accounts. It's like the Dave Ramsey envelope method, right? We're using multiple envelopes to say, this is for this, this is for this, this is for this, and this is for this. And it's the same exact habit. I'm just going to open my phone app and look how much money I have in my bank account. So that's why we're doing this. So your question was, when does this happen? It depends on the cadence of your business, right? It depends on how quickly bills are due, how much money's flowing. I would say at minimum once a month, at maximum once a week. For most businesses, every 2 weeks is fine. Okay. And we're going to call that allocation day. So on allocation day, you're going to clear the income account to zero, flat zero, and you're going to put your percentage into each one of these. Okay. And then I would say allocation day should probably be like a Wednesday, so that way the money can transfer. And then you ideally have your bill set up to pay on Friday, right? You make payroll Friday, you pay your credit cards off Friday, you pay rents or cut the rent check or whatever the case is on Fridays. So I would do allocation day Wednesday and then do all this other stuff on Friday. Cool. So let's go further down the line. Okay. So we've cleared our income account and we've put money into OpEx, owner's comp, tax, and profit. OpEx is simple, dude. OpEx is like, this is what it takes to run the company. We're going to pay our marketing. We're going to pay Chuck to do our marketing. We're going to make our payroll. We're going to cut our payroll checks. We're going to pay our rent. We're going to pay our insurance, right? Like, that's what that account is for. Owner's comp is for you, right? This is the amount of money that you are paid as the operator of the business, okay? Not as the owner of the business, as the operator of the business. If this business independently were to hire somebody to run the show as the operator, that is you, the contractor, and this is what you're getting paid, okay? And I'm actually going to skip tax for a second because that one's super self-explanatory, but profit is completely different. Profit is a different hat than the owners. Profit is the shareholders of the company. You might be in our scenario that we're talking about so far, you're the operator and the shareholder, okay? But the shareholder of the company is an investor in the company and they want to see an ROI. Would you not like to see yourself put 5, 10, 20, 50, $100,000 into a company and then get paid as a shareholder? As the operator of the company, that is your job, is to pay your shareholders, even if that's you, okay? So we're going to take that percentage of profit and we're going to put it into this first bank account, which all of these before this dotted line are at the same banking institution, okay? Let's call it Chase. So all these bank accounts are at Chase. Immediately, that money is moved to a separate banking institution, to bank 2, to a separate bank account. And the reason for that is because when you open your Chase app to see how much money you have, that profit is gone, right? It's in a storage account somewhere at a different bank that you cannot access from your phone. You're not making your business decisions based off of it, right? You're making your business decisions based on the operating expense and the owner's comp in your company. The tax and the profit is allocated for your shareholders and your taxes that are due once a quarter or once a year. So that money's gone, okay? Out of sight, out of mind. And then you get paid as a shareholder.